Welcome to the Roy Morgan Weekly Update. As we revealed last week, support for the monarchy in Australia remains strong and has actually increased from a decade ago. Now, a clear majority of 60% of Australians say that Australia should remain a monarchy. That's up 5% since November 2012. Only 40% of Australians say we should become a republic with an elected president. But to truly understand what's going on, it's important to look underneath the headline figures to see what's driving this result. It's really interesting analysis. Although over 2/3 of coalition voters, that's 68%, now support the monarchy, this is actually down slightly on a decade ago. It's down 3 percentage points. The big move in favour of the monarchy has come from Labor voters. Now a majority of 58% of Labor voters support the monarchy, up a stunning 18 percentage points from November 2012. This big increase, along with a rise in support from those who vote for independents and other parties, is the reason why support for the monarchy's increased from a decade ago. Unsurprisingly, only a third of the Green voters support the monarchy, easily the lowest of any party. But whether you're a monarchist or a Republican, the last week has been dominated by the mourning period for Queen Elizabeth II, the Queen of Australia. And overnight, the Queen was laid to rest at St George's Chapel in Windsor. Later this week, Australians will have a one-off public holiday, the National Day of Mourning for the passing of the Queen. And Victorians are especially lucky with a 4-day weekend including the AFL Grand Final public holiday. Prime Minister Anthony Albanese and Governor-General David Hurley attended the Queen's service on behalf of Australians. And the evidence shows that the last week has certainly not hurt the government's standing with the Australian people. So turning now to the Roy Morgan key weekly indicators. Support for the ALP government is now 54.5% on a two-party preferred basis. That's up 1% in a week and well ahead of the coalition on 45.5%. There were also positive moves in confidence. Government confidence jumped by 7.5 points to 116, its highest level since the federal election. Now, the government confidence rating is the one that tracks whether people think the country's going in the right direction or the wrong direction. Now, a majority of Australians, a bare majority, 50.5%, but a majority nonetheless, say the country's going in the right direction. That's up 5.5 percentage points in a week. And only 34.5% say the country's going in the wrong direction, a gap of 16 percentage points, and great for the government. Consumer confidence, on the other hand, is again virtually unchanged. So the ANZ Roy Morgan Consumer Confidence Rating is on 86, up only 0.3 points. Consumer confidence has now hovered within a narrow range of 2 points between 84 and 86 for over a month, after recovering from a really low 2-year low earlier in August. It's really important, though, to say at 86, these are still very low levels of confidence, well below the 100 mark. Next, we look at inflation expectations. Every week, Roy Morgan asks Australians what they expect inflation will be annually over the next 2 years. And on a weekly basis, inflation expectations were up this week by 0.3 percentage points to 5.6%. The highest reading for over a month. Although petrol prices have come down in recent weeks by around 50 cents per litre since mid-July, the return of the full fuel excise next week, petrol prices are set to increase by over 25 cents per litre. So we'll be looking at the impact on inflation expectations of Australians. A look now at mortgage stress. And the Roy Morgan data on mortgage stress shows that as of July and the first 3 RBA interest rate increases in May, June and July by a total of 1.25 percentage points, mortgage stress among Australian mortgage holders remained relatively low. In July, fewer than 1 in 5 Australian mortgage holders, 19.4% to be exact, were considered at risk. This is below the long-term average. Over the last 15 years, the long-term average was 22.7, considered at risk. but also only 12.7% of Australian mortgage holders were considered extremely at risk in July, also below that long-term average of 15.8%. So although these numbers are low, both mortgage stress figures have increased from their lows in early 2022. And if we now look forward, we know the Reserve Bank's committed to increasing interest rates further from their current level. If we look at the number here for September, we know what the interest rate was. We see that in fact 20.8% of people would be at risk of mortgage stress in September. If we project RBA interest rate increases of 0.5% in October and another 0.5% in November, we can see the level of mortgage stress rises above its long-term averages, up to 24.3%. If the Reserve Bank does increase interest rates by 0.5% in each of the 2 months, we will have 1.1 million Australian mortgage holders considered at risk by November, the highest level since July 2013, over 9 years ago. And it's important to make the note that these mortgage stress figures that we're projecting assume everything else stays the same. So for instance, it assumes that unemployment doesn't get any worse. And one of the things that drives mortgage stress really, really strongly is loss of a person's job. So these figures are, if anything, quite conservative. And finally, this week, we look at the concerns facing Australian farmers who've enjoyed high prices and high business confidence for much of the last 2 years, but are now running into several challenges as the world opens up following the pandemic. At a national level, the biggest challenge for farmers, mentioned by over a quarter, is the same we're all facing in our daily lives: inflation and rising costs. However, in New South Wales and Queensland in particular, 2 states which have experienced a devastating La Nina over the last 2 years, bringing wild weather and flooding rains, it's weather that's the number one concern. Another big concern for farmers is finding workers to take the jobs available on the farm. The closure of the Australian borders during the pandemic and the fact that many working holiday makers returned home during this period have left farmers struggling to find workers, and this is a concern of over 1 in 8 farmers, or 13%. Other big issues include general economic uncertainty that was mentioned by 11% of farmers we surveyed, biosecurity, 9%, and climate change, 8%. So to learn more about Roy Morgan's research into the agribusiness industry, visit the Roy Morgan website now to find the Farmer Agribusiness Brand Trust Report for 2022. It shares detailed insights into the perceptions of farmers and their views of key agribusiness brands. And that's a wrap. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening. I'll look forward to joining you again next week when we'll have the latest data again on consumer confidence, inflation expectations and voting intention. Take care. See you next week.